Our next guest had the best return among Chinese long-short equity funds last year. Clive Zhang's Vision Finance China Ocean Fund gained almost 180%, beating both the Shanghai Composite and H-share indexes. Thanks for joining us, Clive, and good morning. You're still sticking to your forecast for the H-share index. We're looking at, what, 17,000 this year, possibly before the end of the year, and that's a 50% jump from current levels. Why the optimism?
I still hold that prediction H-share would reach 17,000 this year. We have about 6 major reasons for this prediction. Number one, look at the valuation. H-share at this moment it's about 12 times PE on 2010 earnings. We also know renminbi is undervalued. Renminbi would gradually revalue. If we look at the renminbi revaluation pace to be 3% to 5% per year, now the H-share dividend is about 2% per year. We can get about 5 to 7% plus the renminbi revaluation. That's a very good intrinsic return or intrinsic value. That's the number one factor, valuation. Number two, the Chinese economy and the Chinese listed companies' earning growth is quite strong. We forecast this year the earning growth for H-share companies to be about 25% to 30% per year for earnings. If the H-share reach 17,000, the PE is about 17 times. It's reasonable. In the low interest rate environment, we think it's attractive. You know, the
Clive?
Fed, yes?
Clive, I would like to jump in here. Why is the A-share market different? Why aren't you as positive about it?
Well, the main reason is H-share is much cheaper in valuation compared with the A-shares. Also, there are some liquidity reasons. For example, look at the money flow from China, including investment immigration program to Hong Kong. You know, the people from China, they are more familiar with the H-shares and the red chips. So when they come bring their money to Hong Kong, it would be natural for them to buy H-share first. So that's a money flow factor. We just mentioned the renminbi undervalued factor. The renminbi, in my view, intrinsic value would be 4 renminbi to $1. If you believe that, there's a huge upside room for H-shares. But of course, the Chinese government would only allow renminbi revaluation step by step. So that's it would take a long process for renminbi assets, especially the Chinese equity, to gain in price.
What would it take for the Chinese government to be more aggressive or let the yuan appreciate more aggressively?
Well, that's depending on, the international environment, also the employment rate and the inflation. If they feel comfortable about the employment rate and about the inflation, they would allow the renminbi to revalue more, I think.
Clive, I want to talk about the stocks you like. You favor consumer companies. Why is that?
Well, in general, this year, the Chinese policy is to encourage consumption to be a substitute to offset the maybe a slowdown for investment, also the not much improvement for exports. We like, in our portfolio, we disclose the top 3 holdings, or for the moment, our top 3 holdings, including Digital China, that's 861. Also, our top 2 is First Shanghai. The number 3 is 719. It's Shandong Xinhua Pharmaceutical. You see, It happens it's more related to consumer or financial sector. But our investment philosophy is look at the valuation first. We found that they are undervalued in valuation in terms of either PE or PB, but we found more upside catalysts or triggers. For example, digital channel,
Digital channel, you're talking about
yeah.
that stock trading at 13 times next year's earnings. How much higher can the stock go?
Well, in our view, it's fair P at least 20 to 25 times. It implies upside would be in 12 months at least 50% in our view, because this company has many triggers, including the recently joint venture with Octopus in Hong Kong. They would do the business for smart card for about 10 cities in China, including Yangzhou, Nanjing, and several other cities. There's a very, very attractive concept for this stock. Also, it would be benefit from renminbi revaluation because it's the distributor for many foreign IT products, including RIM's BlackBerry. So I think for this company, it's because it has more upside triggers and catalysts. So we are very bullish on this stock. Yeah.
Clive Zhang, thank you so much for your insights on the edge today.